Hello traders, welcome to the new series. This one is going to be all about the thing we are here, Forex. We will start with basic first, but as we progress, we will go much more in depth. So after we will finish this series, you will know everything about the Forex trading. This video will look at what Forex is and what compare it to the other two popular markets, such as futures and stocks. What is Forex? Forex, short for foreign exchange, is decentralized global market where all world currencies trade. It is an over-the-counter market, which means that there is not one centralized place. In other words, Forex is a decentralized market with a more than 5 trillion daily volume. For comparison, the New York Stock Exchange has 22 billion daily volume. Bank and large institutions are the big players in the Forex game. Retail traders make only around 2 to 3% of that daily volume. Each Forex trade involves two currencies because you are betting on the value of one currency against another. In the Euro United States dollar, which is the most traded currency pair in the world, the euro is the base currency and US dollar is the quoted currency. If the euro-dollar pair's price is 1.12, it means that 1 euro is equal to $1.12. If, for example, the number increases, this means that the euro is getting stronger to the dollar. As the market is open 24 hours a day, 5 days a week, it becomes extremely liquid over time. Trades can be closed within minutes of opening, but can also be held for months. And due to the size of the market, even players such as banks can't easily manipulate the prices. All of that led to Forex becoming a favorite place for many traders. Forex versus other markets. So why should you trade Forex? We already described all the different markets in the previous videos. So now let's compare them to Forex. There are pretty much three major markets that are traded: Forex, stocks, and futures. Forex compared to stocks. Fees are the first great advantage of Forex trading because most brokers make money due to the spreads, which are usually very tight anyway. You can trade Forex with very low commissions and fees. We are not mentioning swaps, which can add additional costs for holding position overnight. But swaps can also be positive where a trader is actually paid for holding a trade. Trading hours. Forex is traded 24 hours a day, 5 days a week. This is the difference from stocks, which are only active during the United States trading hours. This obviously goes for US stocks, which are most liquid and popular. Immediate execution. Because the Forex market is extremely liquid, in the vast majority of cases, you are getting executed at prices you see at your broker trade window. In trading stocks, this is the case only at the big blue chip stocks. If you decide to trade less liquid companies, you will have a hard time to get in and out of the trade once you start trading with a more significant account. Market restrictions. In the stock market, several rules prohibited traders from trading freely. From 1938 to 2007, an uptick rule required short sales to be conducted at the higher price than the previous trade. Several other rules and regulations often happen in the stock and the futures market, such as limit up and limit down, which we could see during the COVID-19 crash in March 2020. Market manipulation. Let's be honest here. All markets are manipulated. Even Forex, we could see a lot of headlines where major banks were fined by SEC for manipulating their clients' orders. But in general, the Forex market is much harder to manipulate due to the huge daily volume of over $5 trillion. In the stock market, we have many penny stocks that are very popular among the traders and are often manipulated with pump and dump schemes or insider trading. Number of products. On the New York Stock Exchange, there are around 3,000 listed companies and another 3,000 listed on Nasdaq. If you add Asian and European stocks to the mix, you are looking at a very long list of products. Is it realistic to trade all of them? No. Are you likely to lose focus because you are going to try to find new opportunities constantly? Yes. Compared to that, you have 28 majors and crosses in the Forex. Of course, there are exotics and CFDs offered by Forex brokers but it's still much less than stocks. Forex compared to futures. In Forex trading, there is a limited loss you can get with every trade. This is due to the margin used for every position. Once you lose, and trade goes over the margin, you will receive a margin call which will immediately close your position. In future trading, your position can be liquidated in a much more significant loss than you expected. For example, this happened during the oil crash where prices of crude oil were traded in negative territories and traders owed money to the brokers. Higher liquidity, 24 hours a day, trading, low fees, and over 5 trillion daily volume is something you won't find in the futures market. Also, if you are interested in trading popular futures products such as S&P 500, crude oil, or gold, you can still participate in those markets through CFDs that are offered by Forex brokers. One of the significant advantages that futures market have over the Forex is transparency due to the futures market's centralized nature. An account at a Forex broker can be opened with as little as $100. For trading futures or stocks, you need at least several thousand to cover margins. If you want to day trade stocks, you need $25,000 account minimum. Alright traders, this is going to be it for the video. I hope that you have enjoyed this video. And if you have any question or you are just interested in something, just let your comment down below. Please don't forget to subscribe our YouTube channel. And I wish you steady study and see you next time.